This morning has seen a flurry of press activity as market watchers have been trying to extract any insight they can into the future of OPEC and the global oil market. With Saudi Arabia coming to this meeting with the goal of repairing relationships and returning OPEC to relevance, it remains difficult to see how Saudi will be able to accomplish this while keeping their own interests at heart. Brent crude prices quickly popped above $50 this morning, but quickly retreated. Among the drivers of this temporary pop were rumors that OPEC may institute a production cap at 32 million barrels, a slight reduction from current production levels of 32.4 million. But this remains unlikely. During a press scrum this morning, new Saudi oil minister Khalid Al-Faleh stated the markets had returned to balance and that inventories remain the only hurdle, failing, of course, to mention that this market balance is partially due to supply disruptions that are likely to be temporary. Other OPEC nations continue to provide conflicting positions. Iraq indicated a production cap at current production levels would work well to stabilize prices, but did not seem interested in going any lower. Nigeria stated they actually believe their production will be up to 2.2 million barrels a day by August, a 500,000 barrel a day increase from currently advertised production levels. And Venezuela proposed the idea of production ranges to be applied to each individual OPEC country, and bizarrely suggested that these ranges should be applied to non-OPEC members as well. At this stage, the keystone to any deal remains Iran, and whether they will waver on their plans to nearly double their exports from 2 million to 3.8 million barrels per day, a plan that they reinforced in the press just prior to the meeting this morning. Right now, it looks like building OPEC consensus remains unattainable. Balancing the desires of smaller OPEC members to drive higher prices with the will of larger members to let the market work still seems to be far off. The establishment of an unenforceable production target could be a way to keep OPEC relevant while giving larger OPEC nations the flexibility to produce at their desired levels, but it would largely be symbolic and is not likely to impact current production levels. Even this symbolic gesture seems unlikely without Iranian support. For more updates as they happen, visit our OPEC meeting tracker at stratasadvisors.com/OPEC or follow us on Twitter.
To stay up to date on the most recent Hart Energy videos, subscribe to our YouTube channel by clicking here.